Good morning, everyone. This is Angie with Producers XL. This is the Producers XL Persiflage, the month of February, of course, the month of love. Today being February 25th. This is the last Tuesday of the month. So, of course, we are coming to you with the podcast. And in 2025, I told you that I was going to kind of expand our horizons, if you will, and really just embrace anything and everything insurance related, right? Insights to the insurance pros about any life insurance or annuity or long-term care or short-term care, disability, whatever insurance product kind of, I guess, strikes my fancy in any given month. But this month, I am really excited. I have a friend of mine, Mike Simenstad with National Guardian Life. Mike, thank you so much for joining me this month.
You got it. Thank you for having me, Angie.
Well, we are going to have a lot of fun on this because you have an entire presentation, PowerPoint, if you will, and I'm not so sure that maybe you and I won't turn this into a webinar, but it's really all about how the past lessons can propel us in today's long-term care solutions. And that's literally the title of your PowerPoint presentation.
Right.
And so I thought if you and I just kind of had a conversation around this, there were some really, really strong points in here. So for my listeners out there, most of them relate that National Guardian Life has a traditional long-term care solution. But what's great, Mike, about the presentation that you have is that you really kind of walk down memory lane, bring us to current, and kind of talk about everything that's kind of happened in there. So I love actually slide one. And again, to all of my listeners, you're not missing a presentation or missing a slide. I'm talking about his actual presentation. But the very first thing that we start out with is stronger than ever. And Mike, I think a lot of people would be like, "Oh, Angie, I don't know about that. I think traditional long-term care is dead or dying, or depending on what LinkedIn group you're following out there, probably
Exactly.
right. It kind of sways your mind one way or the other. But I think you and I, not to be a little biased on this, but by no means do we think it's dead.
It's not. So traditional long-term care insurance, just like how disability insurance went through its learning curve in the 1980s,
Yeah.
in the 1990s and early 2000s, traditional long-term care insurance went through its learning curve. And
Mm-hmm.
the bottom line, and it's really, when you think about it, it's a natural progression of an insurance product, right?
Correct.
And the thing about the way where we are right now in the world of traditional long-term care. Now, first, take a step back and look. Today, we're not talking about the long-term care insurance market. We're talking about the long-term care solutions market,
Absolutely. Absolutely.
which yeah, which is fantastic, right? I
Mm-hmm.
mean,
Mm-hmm.
and we'll talk a little bit about why the need and awareness right now is to plan for this is greater than ever.
Mm-hmm.
But what's great is the long-term care solutions market is very expansive. I mean,
Yeah.
there's a solution for just about everyone. I mean, you have multifunctional life insurance products,
Mm-hmm.
in which you can check a box for long-term care, among other things. You have multifunctional annuities, you have asset-based long-term care solutions, which are fantastic. But you still have good old-fashioned traditional long-term care insurance, which for a lot of consumers is the most appropriate solution because you do get the most long-term care bang for the premium dollar. And
Mike, I couldn't agree more with that. And quite frankly, I think that's where the vast majority of Americans need to focus. If there's a producer, an advisor, an agent, if there's someone out there that could crack the code, and there are some that are doing it, but you crack that code of middle America, traditional long-term care insurance speaks to that all day and gives them absolutely the protection they're looking for at the premium dollar that they can budget. And so I think that is just massive.
you're absolutely right. And given the fact that A, uh, the products offered today, and there are about seven traditional carriers,
Mhm.
um, seven carriers offering a traditional long-term care solution. But
Mm-hmm.
number one, there's more customization than ever with traditional long-term care insurance, even more so than 20 years ago when we had
Oh yeah.
almost 100 carriers.
Oh
But
yeah.
the pricing for new products offered
Yep.
today, the pricing and risk assumptions have
Yep.
been completely stabilized, and the
Yep.
traditional market is strong. It's where it should be.
And that's really something that I think agents have got to be comfortable explaining, that because you're always going to have the Debbie Downer that's like, absolutely not. This stuff took, I mean, I've seen policies take 90% rate increases, but Mike, we cannot overlook the 2006 Rate Stabilization Act that was passed by the NAIC. That was an intentional rate stabilization, and that's exactly what you're referring to, is why we talk about the stability of the rates. Now, that doesn't mean that policies sold today won't ever take a rate increase. It's all about being responsible, right? Because we're managing books of business at an insurance company. And last time I checked, you guys weren't not you were not a not-for-profit, right? So
Right.
everything's about being prudent in your pricing. But if we could all go back and look at 2006 when that rate stabilization came out, you saw some huge new business rate changes, as well as gender pricing, which for the ladies, right, costs
Yeah.
us more now to buy long-term care because we live longer. So that you saw that big step going forward to really kind of stabilize the way carriers are pricing their products today.
Absolutely. So there are basically four main categories, right? That the carriers have fixed, as opposed to, when this product was being priced based on guesswork. Right. So here's what's changed. Number one, and this is the obvious one, and we've spoke about this before, the lapse rates or
Yeah.
persistency, right? Oh my God. In 19, especially in the early 90s, when you had, the Amex Lifes of the world, the CNAs of the travelers, right?
Yeah.
This was a brand new, I mean, let's face it, comprehensive long-term care insurance was launched basically in 1985. And by
Yeah.
comprehensive long-term care insurance, I mean, the way it is now, covering all
Right.
levels of care in a
All levels.
facility
Yeah.
and home health care. And when it started taking off, right, there was no data from which to price these products. So most of these carriers, especially the ones I just mentioned, said, all right, well, we have to make an assumption about persistency, lapse rates. So we're going to equate it to life insurance. In fact, we're going to equate it to term life insurance, in which about 10, 12% of policyholders eventually are just going to lapse. And that was the assumption that was made in those early days. Well, guess what? And you know what I'm going to say. Hardly anyone lapses
Right.
traditional long-term care insurance, because it's the one product that certainly looks better, with age. So no one lapsed it.
Yep.
And that was a big, big
Yeah, and
misstep. But
it's one of those, who would have known, right? That's like, I mean, you just mentioned it. The first iteration of a long-term care policy was back in 1974, right? We're not a century old industry for long-term care and long-term care products, right? Not like life insurance that's been around a couple of centuries. Like even the first one, I mean, go Google it. It's like 1759 was one of the first insurance companies in the United States. So, I mean, that's why I think if we think of this long-term care industry as going through its evolution, I don't there shouldn't be there really shouldn't be a negative cloud or a rainy cloud hanging over it, because it's not doing anything that any other insurance product that's been developed. And even though we say, but they were horrific rate increases, I could even argue that, because if you were to actually amateurize that out, over the length of time. Some people were holding policies 10, 12, 15 years before it took its first rate increase. Now, albeit it might have been a big one,
Yeah.
but cumulatively over the life of the policy, it was a couple percent a year. Well, you're taking that on Medicare. You're taking that. I mean, you're seeing those increases on other health products. So I think a lot of it, honestly, was the posturing, the way it was presented, and
Absolutely.
maybe the story from the insurance carriers didn't come out the way it should have, and shame on us as insurance agents for drawing that negativity around it, which then in turn what forces us to either abandon, jump ship, or embrace it. But I'm telling you, there's new carriers filing, well, do I want to say new, there's carriers filing new products.
Right.
Right, so it's not dead, it's evolving. And I think if we take that approach and talk about kind of where we were, where we're at, where we're going. Like you said, 7 traditional carriers. Now, with that said, if you're independent, you're going to sell 3 of them. The rest of them are captive, but you've got the good news is you have lots of choices. The bad news is you have lots of choices. So it's kind of like you want your cake and eat it too. Well, guess what? You might have to actually shovel it with both forks, because now, as the agent, to do the best job for your client, you need to not only know traditional, you need to know life with a rider. You need to know a hybrid, which is, kind of more of what we did consider an asset based type. You got to know the annuities with riders. And then you got to be able to talk yourself through what self-funding looks like, because if you need carrying your self-funding, there is a cost to that. So I think all of this is, I mean, really, really good stuff. But really, when you talk about I mean, really, just bust it down to its bare basics. You've got to develop the need. This is a product that will forever and always have to be sold. It's not going to sell itself. Even the people that knock on your door and say, "Hey, I need to talk to you about long-term care insurance," you got to ask them why. Why are you asking? Um, right. So the misconceptions, I don't think, around this solution, this planning step, I don't think they're ever going to change. They're always going to be there, because if you go to a coffee shop, somebody's always going to know better than you. Someone's always going to have a better experience or a worse experience. So I don't know that that matters. So you really have to get good at developing the need, talking about the unintended consequences without a plan, because we plan for everything: birthdays, funerals, retirements. I mean, you plan for everything. This is
I
just a piece of the planning step that you have to address.
listen, you are absolutely correct. And with that, as far as it's a product that is sold, rarely bought. I do think now we're at a time where there's more greater awareness.
Mm-hmm.
Number one, maybe a greater awareness of the need to plan for a
Yeah.
number of reasons. Maybe 2 main reasons. Number one, people are going through it themselves and they're learning the hard way with usually a parent or
Yeah.
a grandparent or a family member that Medicare and Medicaid in most cases is not the answer, and they
Right.
learn the hard way. uh, but number two, I do think, and I don't mean, I'm not getting political, I don't know, it doesn't matter what side of the
Mhm.
aisle you're on, but the fact is people are reading in the news today with the new
Yeah.
presidential administration, there
Right.
there are cutbacks everywhere,
Yeah.
and I hate to say, on the chopping block, that's probably not the right term to say, but there are going to be cutbacks in
Mhm.
Medicaid right now. Whether those are going to be block grants rather than the status quo,
Mhm.
which is and that's looks like where that's heading. The bottom line is the overall message from our leaders in the United States of America is, don't look to the government for any handouts on anything, especially when it comes to healthcare. I mean, that's whether you like it or not, that's the overarching message. And the bottom line, people are going through it and they're hearing it in the news, that you're going to have to take personal responsibility, just like you said, for almost everything now. So the bottom line is, in this great country of ours, who pays for long-term care services? Look in the mirror. It's
Yeah.
yourself.
Yeah. Well, and it's one of those things that I don't think anybody with a heart and having some empathy for their fellow man, right? Medicaid is there for a very specific reason. And I don't think anybody would say that if somebody is deserving of the Medicaid dollars, then by all means, that's why that program was developed. But it certainly wasn't developed as a loophole. That was never its initial intention. And the misconception that, I pay my Medicare taxes or I pay my taxes, therefore it should be covered. You're right. I mean, what a horrible eye opener for most. And for the folks that need to be on a Medicaid program, these aren't your prospects for long-term care. But it's a conversation that an agent needs to take a serious look at their book of business. So I'm going from a property and casualty agent to a financial advisor registered rep. I'm coming from one end to the other, and I'm saying, and the independents in between, you need to be looking at your book of business, because what happens when one of your clients goes through a crisis, an extended care planning crisis with their spouse or with a family member, and they don't have a plan and they're not insurable because this is an insurance product that has to be underwritten. Your health buys this, not your checkbook. Your checkbook pays the premium. Your health buys the coverage. So,
Absolutely.
so if you aren't having at least lobbing the softball out there, if you're not working with someone like myself, with someone at a general agency, a brokerage general agency, an FMO, whatever you want to call us, if you're
Yeah.
not working with one of us and you're not comfortable enough to just throw the idea to your customer and bring up the conversation,
Yeah.
you should be able to lean back on. I mean, I can't tell. I don't work with long-term care specialists. That's not my distribution. So
Right.
most of them, and when I say most, I mean most. I'm in the 90th percentile where they will call and say, Angie, can you be available? Mike, after this recording, I'm on a call with a financial advisor and his agent and his client, because they don't specialize in it, but they're smart enough to know that they've got to bring it up, because that three-legged stool isn't going to sit upright when you kick one of the legs off of it. And one of those legs being, I didn't bring up extended care, and now my entire assets under management, my entire personal lines, commercial lines is going to explode, because they're going to quit paying premiums, or they're going to have to take money out of their, IRA or whatever the case is, right? So it's really just being diligent and being comfortable enough. And I have often said this, you as the agent advisor, you have got to be comfortable enough making your client uncomfortable about the conversation so that you can have a further discussion with them. Because nobody wants to talk about long-term care insurance because it's exciting. But yet everybody will talk about, oh, I should probably buy some life insurance. Well, long-term care insurance isn't fatal. You're still alive. You just need some help. So I don't understand why we'll talk about life insurance, even though today, right, it can provide a living benefit, but those are typically sold as an, oh, by the way.
Right.
Well, I'm not going to give anybody a pass that's selling long-term care insurance as an, oh, by the way. Oh, by the way, it's a couple of $100 to add this to your life insurance. It's a really good idea. Yeah, okay, let's do it. You didn't sell it. You just convinced him that it wasn't a lot of money to add this little rider, right? So,
Right.
and I'm not saying life with long-term care riders is a bad thing. I think they are a good thing. I
Oh,
like the choices we
absolutely.
have, but we have to be able to be comfortable enough to bring it up, lean back on the professionals, because it's their job. It's my job to make a complex conversation as easy as possible. It's my job to go to market, look at the solutions, hear what your client is asking for, and then come back to you with a couple of solutions. Here's what doesn't work. Here's 3 traditional quotes. Here's 2 life with long-term care riders, and here's 2 hybrids. Good luck.
So, you are absolutely right, because unfortunately, you know how people are today, right? They want to go out and do their own research. All right. So, people, realize, all right, I need to plan for long-term care. Let me, go out and do my own research. And if you go on the internet and do an internet search for
Mhm.
long-term care insurance, well, listen, there's so much information out there that people are going to get confused. And quite
Yeah.
frankly, there's a lot lot of misinformation out there as well.
That's right.
Now, another source, when they do their own research, is someone they trust, such as their financial advisor. And the fact that, thank God for people like you and your organization, where, the advisors, and listen, an advisor, cannot be an absolute expert on
Oh,
every little
no,
thing. And
no.
thank God that they have people like you that can go out there and say, listen, it's not just long-term care insurance, it's long-term care solutions. The market
Yeah.
is expansive and the menu is expansive, and we really need to take a look and see what type of solution is most appropriate for them and their needs. Um,
Agree more.
and the good thing today, and seriously, I think it is now is the best time to be in long-term care insurance, is that all the solutions, right, available are solid, including traditional long-term care insurance. And I
Yeah.
know it's emotional, right? That boy, all people are, feeling the reverberation of the
Hmm.
mispricing of the past still.
Right.
Right. And the carriers are going back and correcting those. But the fact is, out of the 7 carriers selling today, they're priced all using correct lapse rates assumptions.
Right.
They're
Right.
all priced knowing that hey, it's basically a low interest rate environment is going to be the norm. They're also priced knowing enjoying basically 50 years of long-term care morbidity tables that now exist, which is great. And you know what? Just like you said before, where your health buys long-term care insurance and money just pays the premium.
Hmm.
Now, and this is one of the most important, carriers now know that underwriting, right, making
Hmm.
the right risk choices, as opposed to in the mid 90s. And believe me, I was there, and so were you, and I was like astounded by what
What they
some
were
people.
taking.
Yeah, absolutely.
Hmm.
Well, that's different now, right? I mean, there's 2 types of currency now. You have your regular money, and then you have your health currency. And carriers have got the
Right.
health currency down.
Yeah.
And basically these 4 categories have changed, and that is what makes traditional long-term care insurance now completely viable. And and you'll see this in the coming, in the rest of 2025. There are new carriers being introduced, some
Right.
being reintroduced into the
Exactly.
traditional long-term care market.
Yep.
And what one final thing I wanted to add, that I heard you touched on back in those early days, I think, and you make a very, very astute point, that the carriers kind of brought the bad PR, themselves, with the expectation that in the 1990s,
Yeah.
when these products were being sold like
Yep.
gangbusters in the
Yep.
early days. And let's face it, I mean, they were selling lifetime benefits, 5% compound inflation,
Yeah.
and people were being told, hey, these products are guaranteed
Oh,
renewable.
yeah. We've not
And
taken a rate increase. Doesn't mean
right. What is
I know.
exactly right? So the expectation, whether it was from a wink or a nod
I
or
know.
mistakenly, the expectation I think created by
Yeah.
the industry was, hey, these rates are going to be the same
Yeah.
forever.
Yeah.
And but it's health insurance. Health
I know,
insurance
right?
rates went up, and
Yep.
while I could, and maybe, just maybe, if the carriers would have managed those expectations in those
Right.
early days for those early policy forms,
Yeah.
traditional long-term care insurance wouldn't have, when
Right.
clients do Google traditional long-term care, they wouldn't see rate increase. But the fact is today, a product purchased today, hey, out of all the types of health insurance you can purchase today, you could argue that traditional long-term care insurance just may
Right.
have the least chance of having a
Right.
rate increase.
Right. Well, Mike, I definitely want to give you a moment. This is kind of about the timeline that I like with my podcast, so that folks don't get too I don't know how they'd ever get bored with this, Mike. I don't know.
Time consuming.
I think we're pretty entertaining, but I want to leave on a high note, and I want to give you just a minute or two to come through because you were so gracious enough to share this information, share the content, come on and be my guest in February. And I want you to give us a few highlights on National Guardian's traditional long-term care product.
Oh, well, thank you, Angie. So I'll be really quick, and I'm going to start by saying all 7 carriers that are selling traditional long-term care insurance are fantastic. They know what they're doing. They've stayed in the market. They do the right thing. They know how to pay claims. But every carrier has its niche. And I would say with NGL, the niche at NGL is for couples that are close in age, and especially for couples under the age of 70 that are looking to get the most long-term care bang for the premium dollar. It's going to be really tough to beat NGL. Especially with the fact that they do. I think many people are familiar with shared care, how that works.
Mhm.
If not, call Angie and her team; they'll explain it to you how it works with the various
Yeah.
carriers. But with NGL, they give you tangibly more benefit dollars. You get a third pool of money in case either spouse exhaust their own pool, then they need more care than the average. They can then use that third pool without invading their spouse's main pool of money. So
Yeah.
that
Really strong.
that's the bottom
Really
line. Yeah,
strong.
yeah, it is. It's unique and it's strong. And the fact that NGL, actually, it's a conservative Midwestern insurance company that's been around since 1909, and they entered the market at a good time in 2016
Huh.
when the learning curve was over, and they said, okay, we know how to price this product. Let's price it correctly from the get-go. So that's it. It's a good for people that want a solution for one thing, especially couples under the age of 70. It is
Mhm.
a very, very solid value.
Mhm. I'll add a couple of more things. They also do offer a lifetime benefit, an unlimited benefit. They also offer a 10 pay, and in the states that most of the states that's offered in, it's a fully guaranteed premium 10 pay throughout the 10 years and beyond, of course. And they still offer a single pay. So you really want to get your most bang for your premium dollar, of course, that's where you'll see the leverage. So really some cool things coming from National Guardian Life. We quote them all the time. So, Mike, I want to thank you so much for being my guest in the month of February. It was wonderful having you. I look forward to having you back. And for those of you listening on demand, be on the lookout because I have a feeling Mike and I might be doing this entire presentation with his slide deck as a webinar because there's lots of great information that he can share. So again, Mike, I really appreciate it and thank you for your time.
Thank you so much, Angie. Take care.
All righty. And we will see all of you next month. That is in the month of March. It's March 25th. So don't forget to tune in for the podcast next month. Thanks all.